Hello traders and welcome to another video review. Today is Thursday, September 14th, 2023. Let's take a look at the Forex economic calendar for today. The key event of today is the European Central Bank interest rate decision, deposit facility rate, and of course the ECB press conference. The interest rate decision has been scheduled at 2:15 and the press conference has been scheduled at 3 o'clock. So what's the situation here? The deposit facility rate is expected to stay at the same level of 3.75%, and the interest rate decision is expected to is expected to take place at 2:15, and the interest rate should stay at the level of 4.25%. So definitely we are going to talk about the euro today. More very important data are coming, are scheduled for release during the New York session. Core retail sales at 2:30, PPI and retail sales and initial jobless claims. All of this data are scheduled for release 2:30. Let's now switch to the technical part and take a look at the euro dollar to see how the interest rate decision might affect the most popular trading pairs per rate. So this is a daily time frame chart of the euro dollar, and as you can see, we are following a very particular pattern here from the technical point of view. This is a head and shoulders pattern. So let me just point it out here for you. So this is the left shoulder. This might be the head on the top of 1.1276, and basically that might be the right shoulder here. So in that situation, we are now extending the drop as the head and shoulders pattern had been violated. As you can see, this neckline had been tested as well during this slight bounce, and then market went lower. Now, what is the situation with the price range? So let me just go for my tool of the price range, and you can see that from the top of the head to the neckline breakout, there is -3% right decline. So if we assume that this decline is still a valid one, we should drop towards the level of roughly around 1.0510, which is apparently this level here, this technical support here. So that's the target. Let me just place it in, make it black, sorry, and then maybe this one might be useful as well. 1.0479. So this is the target for the bears because of the head and shoulders pattern. The low was made at 0.687. That's the local technical support. There's one more technical support and the swing low from the end of the May 2023, located at 1.0636. So that's the technical support here. And today's decision might increase the drop lower, might accelerate the drop lower towards the technical support, and then even ultimately towards this level here, the black horizontal lines. Intraday technical resistance is 1.0766, and if this level is not violated, then we should see another extension to the downside. If the ECB will basically cut the rates or will leave it unchanged, then of course the probability for market to move lower is higher. However, if the ECB will hike the rates, then the market might reverse temporarily, because the market participants will likely go and buy the euro and sell the dollar, because the difference between the interest rates between the European Central Bank and the Fed is kind of a huge. So it's right now might be better to buy the euro and sell the dollar, because the euro might get even more expensive in the future. That might be one of the many of the logic right now on the market. The market participants might follow this logic, but that's not the only one narrative that is being expressed on the financial media right now. There is more different reasons why the euro dollar should of course fall even lower. On the other hand, the situation on the fundamental situation and sentiment situation on the euro dollar is quite negative right now, as the euro is not being perceived as the safe haven currency, and in these days we need to take this one into the account. This situation, we need to take the situation into the account as well. So that's the euro dollar. Roughly, this is the target for the bears. So we know this already. Let's now take a look at the euro to yen. Let me just play with my chart a little bit. There you go, euro yen. Let's switch to the daily. Because on the euro yen you can clearly see we have a problem here. We have a situation here. I mean, not we, but the bulls are having a problem. So the local high, let me just get my magnet. The local high and the swing high was made at 159.68, so almost 160, right? And that was made on the end of the August. Since then there was no change in the price, and the market just deteriorated lower. So a slight pullback was made, and the low of this pullback is roughly around the level of 156.54. Okay, there is one more level that we should place here. This is 155.48, and maybe this level here, which is obvious level, should be placed as well, 151.36. So those are the technical supports on the euro to the yen, but you can clearly see that this is the uptrend. The euro yen is developing the uptrend, but there is a particular situation here on this chart. You can see it straight on right now. This is the extremely overbought situation on the daily time frame chart. The price of 158, let's say, extremely overbought levels on the RSI. Then we've made another high. Okay, so we've made another high, so this market is going up. So the price is going up. Nevertheless, if we take a look at the momentum, we can clearly see the momentum is going sharply down. So the new highs are being made with lower momentum. So right now, even if we do like kind of a, let's say, arrow like trend line here, so you can clearly see that we are moving now towards the level of 50, which is the neutral level, and we just wait for a dip lower. And this bearish divergence or negative divergence is very important for the market participants, because it might cause a very nice drop to the downside very soon. So what we need here is, of course, our price range tool, because the last correction was -4%. And let me just zoom out to see. Okay, the low is roughly around here, so maybe this one as well. Let me just take this price range tool again. So maybe this one we should take a look at, -4.63. So that's even bigger. And the last one will be this one. Let's take a look how big correction was made in the beginning of the May 2023. That's 3.62. So anyway, this correction might have roughly around 4% or a little bit more. So if it will start soon, then this low will be taken out, this low will be taken out. We might test the 100 periods moving average, 154.40, and then even go lower, because there is room to the downside on the momentum, there's room to the downside on the market. So please take this into the consideration when you are trading the euro to the Japanese yen. And last but not least, what we want to take a look at is the gold market. Let me just play with my chart. And the gold market, as you can see on the daily time frame chart, again is moving lower. Okay, so the momentum is negative already, and where we are going, let me just zoom in a little bit. So we are approaching right now the level of the technical support and the swing low, 1884. This is the next target for the bears. We recently established some sort of the trend line here. You can take a look. So we had a kind of a let's say false breakout, right, towards the level of 1900 and I guess 50, yes, 52. That was the fake breakout, and now we are back below the trend line. We tested it once again on the 11th of the September. We tested it again, and then we were rejected, and now we are heading here. There's a room to the downside. There's a room on the chart as well. We should see more downside on the price of gold soon, and in that situation, the euro dollar should follow the path to the downside as well. So because basically the US dollar will be the king sooner or later, especially if the Fed will assume or give a signal to the markets that they want to hike the rates again in the nearest future. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.